How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for December 11, 2018. Here's the positions that were being held at that time by the institutions. And so let's take a look at gold and see what we can decipher from here. So we see price playing out the way that we were expecting it. They were very aggressive with short positions down here. We expected them to take profits, which caused price to move up, and that's exactly what took place. So price dropped down into the weekly area of demand, responded to the upside. We had this opposing weekly area of supply that has since been removed, and now price reacting from the opposing weekly supply, and we're seeing a push to the downside. So what can we tell by looking at the current data? Well, we know that they're increasing their net positions to becoming more positive to the long side. This past week we see 49K up to a positive 60,000. All right, so the bearishness is slightly turning neutral now. Now this is to be expected if we are expecting a move up like this. If this move up is going to take place, we'd expect some closing of their shorts and some adding of their longs, right? So far we see that they were adding and then closing, and now longs are somewhat neutral as they've been closing shorts. And that's okay. That still sticks with the idea of a move to the upside. All right, not very strong, but the signs are there of that bigger move. So pretty much everything is playing out the way that we were expecting. Now if we take a look at oil, we see that oil is sitting within the opposing monthly area of demand. I shouldn't say opposing actually, because the trend is upwards and monthly demand is in control. And we take a look here, and what do we see? We see a lot of profit taking on longs, and this is exactly what I said was going to be taking place since these highs up here. Profit taking on longs. And now we are seeing shorts going from very neutral to, take a look, starting to become aggressive. Now, starting to become aggressive at these lows is not typically what would cause a move lower like this. This is more typical of a move higher and then stronger shorts being added and a move lower. So this is what I am forecasting is going to take place here. Okay, this is what I see, is that we're going to see a push to the upside as they continue to add shorts, and then we're also going to see them adding some longs to help push price to the upside. And then once we get up here, they'll be closing those longs, adding more shorts, and then an eventual move even lower on oil. Okay, now we look to the dollar, and we see that longs have been somewhat aggressive, more so than shorts. If you take a look at shorts, they've been pretty much very cooled off. So really, they're able to just push price up if they want to, because they're well positioned for that. What leads me to think that there's still going to be a drop to take place here is the overextension here with their long exposure. 88, 86, 87, 85, they're still very overly exposed to the long side. And when you look at the other dollar pairs, they are just ripe for a move to the downside. So I'm still watching for that move to the downside on this pair, and we'll see how that ends up playing out. Aussie US dollar. Price is reacting to what could possibly be monthly supply, and as it's reacting, we see that longs are very cooled off and shorts used to be very aggressive, becoming less so. Okay, so as they were becoming less so, that's with a move to the upside, profit taking on shorts all the way down, and now profit taking just like on gold. Okay, but I believe there's going to be a bigger turnover to the downside like this. Is this the beginning of that turnover? It's very possible. Like I said, longs are cooled off, shorts are aggressive. You know, back in May, June, July over here, longs used to be somewhat aggressive. They've been very cooled off all throughout here. Okay, while longs getting very aggressive, profit taking up, and they can start becoming aggressive again as the weeks unfold for a bigger move. So I'm watching this one for a move to the downside. Then we go over to the US CAD. Very tricky because we're stuck in between some supply here some supply here, and we got demand here. So price could drop down here. You know, it's aligned well with the US dollar and what we're seeing with the US Swiss franc and also the US Japanese yen. Issue here is that when you take a look here, neither longs or shorts are aggressive. And we look at shorts and longs here, and we see the coloration is neutral. So very difficult to tell what's going to take place here. This area can hold until the bigger move to the upside. That's very possible. So we move over to the US Swiss franc, and I've been mentioning this in the Rougeau reports that we are seeing very good evidence of a bigger move to the downside about to take place. Okay, we know longs are aggressive. They were very aggressive back in the summer. Okay, right here, very aggressive. And at that time, shorts were very cooled off. They've since become more aggressive up at these highs, which is one of the indications that a bigger move like this can take place. But as I've mentioned in the Rougeau report, there's a bigger theme being played out right here, and stronger evidence to suggest that we're going to see a push to the downside here. Okay, now let's take a look at the euro. This one's probably one of the most difficult to read, just based purely on the COT data. What we can see just by looking at what's available here on this chart is that longs were the net position, and now they've become the shorts. Okay, now we've been expecting a big move for a long time. Whether it's going to happen from this area straight down or whether we're going to get a push up is what's in question here. There's a very good chance that we just see a push lower from these areas, especially considering what we're seeing with the Aussie and what we're seeing with the Kiwi dollar. Now, I'm not going to go into too much detail in regards to that because I covered that in the Forex Market Outlook video that was released to the students on Thursday. But there's a good chance of that. Bottom line, we know that price is going to go down, and we see them accumulating that big short position here. Okay, longs were very aggressive back in the summer. Okay, and that's over here, but they have since been closed down to the 144s. Okay, 144s, 146s. So we're seeing longs closing, shorts increasing for a bigger move to the downside. All right. Now let's take a look at the pound US dollar. This one's even more difficult to read. There are very strong signs that we're going to see a bigger move to the downside coming. And we see that back in August and September throughout here, they were very aggressive with shorts. Okay, that was an accumulation of a position down here. They've since taken profits on some of those shorts. And longs used to be aggressive with the move up, becoming less so and starting to become more aggressive again. So this is an indication that we could potentially see a move to the upside like that, where they will eventually gather more shorts for a bigger move to the downside. Very possible, because you see profit taking on shorts. Okay, longs were aggressive, becoming less so, now becoming more aggressive again. That could be what leads to a push higher to get back onto these serious shorts and then some to the downside. Okay, let's move on to US dollar Japanese yen. We see that price is at areas where we would typically see some profit taking on longs. Considering the fact that we see long exposure up in the high 80s, and frequently when exposure is up in the high 80s, we see reversals in price and moves to the downside. So combining this with the US Swiss franc and some of the early indications on the dollar, we see that there's a very good chance of a move to the downside. Still watching to see if that is going to take place as we head into the holidays. Now, remember what I was mentioning with the Euro US dollar being at an area where we could just potentially see a move to the downside start to form. And two of the charts that support this are the Aussie US dollar and also the Kiwi. If you take a look at the Kiwi, we know that higher time frame forces are pushing down here, okay? And with that, we have the monthly downtrend here, and we have a 20 EMA that's being contacted, and we see the bearishness start to come in here, okay? With that said, we also know that shorts are the more aggressive position that the institutions have been holding, okay? Very much so back in October, right here. So profit taking on those shorts. Okay, let's take a look here. As we go throughout the summer, we see a big increase in shorts. Longs were aggressive, but they've since been declining into more neutral territory as profits have been taken on shorts. Profits taken on shorts causing price to head up. Now a slight increase in longs. Does that mean we're going to see a bigger move like that? Or are we in the phase where they are starting to reaccumulate a stronger short position in preparation for a bigger move to the downside? That's the question, and that's what we don't know. When we look at the daily chart, which is not available here, but when we look at the daily chart, I've posted some charts in the forum regarding what we're seeing on the daily chart, and we are starting to see early indication that momentum is shifting to the downside. So it's very possible that we're going to see a move like this heading right down into this weekly demand zone. And then from there, we're going to have to wait for some key things to play out for us to know whether or not the bigger move downwards is about to take place, or if we're going to see a move higher. Alright, that is your CFTC report for December 11, 2018. Hope you enjoy the rest of your week, and we'll see you next time. Take care.